This is a pre-market analysis of 10th of August. So things are looking positive on one side. US markets are hitting all-time high. Indian ADRs are looking very positive. So on one side, things are positive, but oil prices again increasing, and this US-Iran issue on the other side, it's still escalating. But the tone is different now from the US president. If you see, he's more looking for an economic sanction rather than military exercise. That's actually very good for the market also. So economic sanction again can create that pressure on Iran and other countries. If it in terms of exporting oil, then that is again going to create problem. And because of that, crude prices again increased. And yesterday you can see Brent crude is trading at around 85. So all these are there. We'll be discussing that. So let's start with Strait of Hormuz, Iran-Oman deal. But before that, we are going to get a flat opening, maybe 10 20 point gap up. There is slight positivity because of all these, not much negative because this war and the sanction and even those cases that we have seen before. So that is not having any impact unless you see some big geopolitical thing is happening during the market. You get a big spike. Otherwise, now things are almost settled. Market started ignoring this, except this crude price and energy crisis. Everything else is almost settled for the market. But now coming to this Iran Oman, see that's the most important weekend development that I need to discuss. The situation is looking slightly positive over there also. The US said Iran Oman agreement is very close. Before, in fact, US was objecting, but now that's not the case. And market is actually expecting this deal soon. So we don't know if it is coming during the market hours, then we can get a good spike also. Okay, sometimes market may ignore because this might have already priced in as well. So on Sunday, Iranian foreign minister have told that the Iran-Oman agreement regarding the new shipping agreement is in the final stage. So the point is negotiations are progressing. A regional shipping agreement may come into effect. That is very much possible. Then the energy crisis may not be a problem, right? It may come down. But Iran added a very important clarification that Iran-Oman agreement alone will not reopen the Strait of Hormuz. Iran have additional condition to US, like lifting the blockade on Iranian ports and the sanctions relief. Right, US have imposed sanctions on Iran that need to be relieved or taken out, and then compensation related to the US military activities. So these are additional demands. So there again, if you see, things are getting complicated. Apart from that, the Revolutionary Guard of Iran, they also have similar kind of message that what they are saying is reopening the strait does not depend only on Iran-Oman negotiation. The strait will reopen only when the US accept Iran's condition, as I told you. Right. So the important point that you need to understand is this part is slightly negative. On one side, the Oman agreement is progressing, but the broader strait reopening that remains unresolved. Now, if you look at Trump's statement, also what he's saying is, you know, he said the US was low keying it with Iran. That means he basically indicating that greater focus will be on economic pressure in terms of sanctions and other economic pressure rather than immediate military escalation. So here the tone is less aggressive compared to before. Otherwise, he will, destroy, and there will be a catastrophic effect on Iran, and we will have Iran will face hell today. This is the kind of statements we have seen, but compared to that, it's much better. It's economic sanction, but if it is economic sanction, the other countries definitely will be affected because if Iran cannot export oil, we are a buyer from oil, so India will also be affected. So basically, the geopolitical escalation risk is reduced with respect to a kind of military attack, but still the energy crisis problem is still there. Okay. Now, apart from that, there are two negative development. Actually, there is a UAE acquisition on Iran for firing a missile at one of its ships passing through the Strait of Hormuz. And then on Sunday, Houthis from Yemen, they are actually the proxies of Iran, and they are the supporters of Iran, and Iran is supporting them by giving all weapons and everything, of course. Okay, so that's a kind of proxy war. So Houthis attacked Saudi's Aramco refinery using a drone, and Saudi stated that the fire was extinguished and there were no injuries. So the point is, Houthis on the other side, right? This Red Sea, and they are attacking Saudi's Aramco. So that side, the crisis is there. So overall positive, if you see, Trump's tone have softened and Iran-Oman is close to an agreement. But negative with respect to this, if you see, Iran added several US-related conditions for reopening the strait, which I don't think that they will agree. Similarly, commercial vessels are continuing to face attacks, like in the case of this UAE. And also, this Red Sea related threats are still increasing from Houthis. Now, because of this, crude prices have gone up around 3%. And you can see WTI is around 80, Brent is around 85. Apart from that, let's look at the US jobs data. The US economy expected to add around 80,000 jobs, but in fact, existing jobs have reportedly declined by around 23,000. And in addition to that, you see the previous 2 months were revised down by a combined 1,03,000. So overall employment data, if you see, that's actually weak. Now, when I say overall employment data is weak, now here there is a catch. It is bad for your economy. When I say from my country's perspective, employment is coming down, it's bad. But when I see from market perspective, it is good. Why? Because when employment is down, your purchasing power will be down. You don't have money, right? And money is not there in the economy because people are not having job. So the demand will come down, and demand pull inflation won't be there. So if inflation won't be there, means Fed won't increase the interest rate, may decrease the interest rate. That will add liquidity to the market, and that's good for the market. So though this employment data is negative for the economy, but it is positive for the market. And because of that, you see September rate hike probability. Currently, it's around 44%. One day earlier, it was 55. 1 week earlier, it was 67. And also, as an impact of this, US bond yield have declined. Technology stock also have rallied, and you can see Nasdaq is around 1.3% up, S&P 0.62 up, and closed at a record all-time high. And Dow Jones is around 0.3% up. So global momentum improved, especially in the Indian IT stocks. That is very visible. Look at Infosys ADR, it's 1.5 up, Wipro 3% up. So ITs are doing good. And banking ADR is also, HDFC closed more than 1% positive. ICICI is also slightly negative, uh, closed, yeah, less negative, but it's still less negative than the Indian market. That means it's compared to Indian market, it is better. So both banks, if you see, showing a positive arbitrage of 1 to 1, 2.5%. So if you see, ADRs are also giving good positivity. GIFT Nifty now trading around 24,570 and 670. 24,670. When Indian market closed, it was around 650. So we may get 10, 15 point gap up or flat opening, I would say. Right. Apart from that, there is a agreement with Iran, Iraq and Reliance with respect to crude oil purchase. 2 million barrels of Iraqi crude will be purchased. So that is again looking good. There is nothing much to discuss on that. You can focus on Reliance with respect to that. Apart from that, if I need to discuss the overall scenario, US job data that is weak, that is good for market, though it is bad for economy. So US Fed rate hike policy has probability of came down, which is good for market. So US markets have closed positive, global momentum is positive, IT ADR, banking ADR is positive, and GIFT Nifty is indicating a flat opening. FIAs and DIAs were both buyers. I'll come to that. The negatives: Iran-Oman agreement is not automatically opening the Strait of Hormuz. Iran have added new conditions, and commercial vessels still facing threats. Red Sea risk has also increased. Crude oil prices increased. And now you look at US futures is mildly negative 0.3%. So institutional activity, if you see, FIIs were net buyers, 500 crore, DIIs around 250 crore. So both were buyers. And open interest also, if you see, 22% call open interest added, put open interest 5%. So put call ratio, if you see, 0.89, which is slightly bearish. More call addition. Participant positioning also, retailers are 11% bullish, prop traders are 3.5% bullish, FIIs increase their negative positioning 13.6% bearish. See, what I interpret is when you want to sell in the cash market, you first sell in the future. So they have increased. This means probably they will sell today. Okay. Now, options behavior also, FIIs is selling more call options, prop traders bought significant put options. So overall, retailers are bullish, prop traders are becoming less bullish, and FIIs are becoming more bearish. So these are the things that I want to discuss. So be very careful with your trading sessions. Okay, keep your stop losses in mind and trade, will only at your important levels rather than chasing a breakout or breakdown. It can trap you because the momentum, if you try to chase, this market is not giving that. Now, if you look at the call side open interest, highest call open interest is at 24,600, and after that it is 24,800 and then 25,000, right? And then put side 24,600 itself, that's the straddle players, then 24,500. These are the two levels. So 500 is a strong support as of now. So 24,600 is a straddle players. Okay, so that's about the session. Thank you so much. If you would like to trade with us in the live market, you can get in touch with my team. Join the session. You can trade with me live where I trade and I explain all my trades. You can watch that and you can learn from that. Okay, so see you there. Thank you.